Hello everybody and welcome to Strategy Now here at MarketStream.live. I am Joe Cusick from the Cusick Group, securities offered by MoneyBlock. This is where we're going to cover what's going on in the market, what are the strategies being deployed, where's the capital being deployed, and I got to tell you right now we are looking at the major indices right now here in the States hitting almost all-time highs. We got the NASDAQ Composite at 5362 up 0.7%. The S&P 500 trading at 2197 up 0.7%. The Dow Jones Industrial Average trading at 18,940 up 0.4%. And the domestically centric orientated Russell 2000, those small cap stocks, trading up 0.3% right now. All 11 sectors are trading in positive territory, except for one, barring one. We'll get to that. Energy's leading the way today, up 2.1%. Utilities, 1%. Technology's up 1%, and materials are up 0.9%. The story really right now is crude and oil in general. Crude futures have been on the rise as participants are starting to get ready for the OPEC meeting that's going to be bringing to light whether or not these nations in the Middle East can come to an agreement on production levels. Over the weekend, an Iranian oil minister came out and indicated that they have three proposals that are going to be put on the table today and tomorrow in a preliminary meeting with all the ministers to come to an agreement on production levels. In other words, they want to cap it. They want to limit the amount of product they're going to be putting out into the marketplace. Now, we have no specifics on this right now, but oil right now is up about $2 overnight and into today's session, trading at around $48.36, up about 4.4%. Now, these are off of levels last week that we saw when it was trading at around $42, $43. So it's been an enormous bounce into this meeting. There's going to be a lot of volatility around this, folks. These are headlines at this juncture. There's nothing formal that has come out of this November 30th meeting. So please trade or invest wisely around this. Keep it small. Keep your powder dry right now. But oil is to the upside, and that has been a catalyst for the equity markets, not only here in the United States, but also globally. We've also seen that there's been a pullback in the U.S. dollar, or as I like to call it, the greenback. That's also contributed to today's upbeat action. You look at the U.S. dollar index, it's down about 0.1%, around 11 cents at 101.10. This is a backpedal after last week we saw it traded a 14-year high. The U.S. dollar got as high as 101.45. And as a matter of fact, I saw that overnight. And the currency has just been moving to the upside with a lot of strength. Now, that has put some pressure on dollar-denominated commodities. So you've seen that not only oil was under pressure early last week, but now the headlines out of the OPEC meeting are starting to uptick that, and the pullback of the dollar is helping. But gold, especially after the election, but also as the dollar strength continued, that put some pressure on gold. You've also seen other softs like corn, beans. Sugar was on the move, but we're watching all of these. Any type of commodity that is dollar denominated was under pressure. With this weakness in the dollar, we're starting to see those uptick a little bit. It also has put some pressure on multinational U.S. multinational companies. The weakness in the dollar now, that could be helping that out. Let's see if this trend continues. On the Treasury side of the market today, you see that there is some modest price action to the upside in the bonds. The short end of the curve, you're seeing the 2-year yield actually pull off. It's down about 1 basis point to about 1.07%. And you're also seeing that the 10-year, that's that longer term bond that I like to keep an eye on, that's down 3 basis points to around 2.33%. Now, this flattening yield curve has put some pressure. Not that it's a ton, but this flattening yield curve between the 2-year and the 10-year, the difference between the 2-year yield and the 10-year yield, that's been starting to narrow in the last couple of sessions. And specifically, it's down about 2 basis points to around 126 basis points. That's from Friday's close on the 2-year, 10-year yield spread. It was at around 128. Now that has put pressure on the financials. Now, yes, it isn't substantial at this point, but financials were basically flatlined to a little bit in the red. So you're seeing banks. So take a look at the KBE ETF. Banks are pulling back a little bit here or holding flat. Basically, we're going to be watching these bond markets and these yields as they start to move. If they start to pull back a little bit and the difference between the 2-year, 10-year starts to get a little tighter, that could put some participants that have been in the financials and seen an impressive move to the upside, almost close to 12% for the sector in over the last 3 weeks, maybe taking some profit. So we're going to keep an eye on that. So that's the strategies that are being deployed right now as far as the sectors, the different underlyings, and we're going to keep an eye on that. Stay tuned for Tech Talk at 3:30 Eastern Time. This is when we're going to sit down and we're going to break apart a couple of these sector ETFs as well as some stocks, give you some looks at the charts as well as the options pricing, tell you where we're seeing where all of these components are pricing in what has happened as well as what could potentially happen as far as price movement in them. So stay tuned. Tech Talk 3:30. See you then.